yeah, the market is down today a little bit, but it's okay. There's a lot of noise about the death cross, which is really, you know, when the Russell 2000, to name it, its long-term moving average breaks above the short-term moving average. It's pretty much considered bearish. It's not bad news. It's great news. You know, it's great news. Small caps are getting less expensive. Time to buy, people. You know, it is, you know, when you have a portfolio that revolves around these kind of stocks, small caps, you realize, indeed, I mean, that it's really bearish there. There's been a lot of losses. You know, you have all these news about the Dow Jones hitting new highs and blah, blah, blah. And then you hear, it's very disconcerting. You hear all these, you know, the market is stopping. We're going to have a huge crash. Yes, it's already happening. For those guys who are in small caps, it's not been very much fun for the past few months. I'd say at least weeks. And indeed, the death cross shows that. But sure, can continue to go down for a little while. But the reality is, it's getting interesting. It's fabulous. I mean, some stocks are really getting cheap there. Growth stocks. I'm not going to give names, because I couldn't make a difference between a good one and a bad one. You know that. Don't start, okay? But this being said, it's starting to get fun. I mean, it really is. I mean, you know, right? Okay? So, if you are into small caps, no reason to be discouraging from a long-term investor. You stay there, I think. I mean, really, and sure, it might go further down. It's possible, but it might not. I mean, it's tough to say. But bottom line is, if you are an investor in specific stocks versus an index, you realize that there are some opportunities emerging out there, and those are worth really betting on. I mean, that's, you know, whatever the index tells you. I really agree with you know, Warren Buffett. I talked to him yesterday, and then he called me again, and then the following day he keeps calling me. I mean, I don't know what to do with this gentleman. I mean, it's just like, it's too much. It's just too much, okay? But you know, he's right. He says, you know, I don't care about macros, or, you know, like, he's right. I mean, you know, who cares? You know, what matters is really a particular company, a particular investment. If it's a good one, why not, you know, take the plunge? You know, I've talked a lot. I mean, you know, it's really tough. So listen, that's really sort of for the death cross. You know, so don't disregard, sort of disregard the garbage you could read or hear or whatever. You're just talking about garbage. You know, that huge demo, that huge, the revolution in the streets of New York about global warming. It's kind of interesting. All those guys that left all this trash all over the place, instead of recycling, tells you something about the crowd. I mean, you know, anyway, I mean, just thought I'd mention that. You know, I think it was a wonderfully inspiring event. But gosh, I mean, you know, if you look at all the Starbucks cups and the stuff that you could recycle that's not been in the trash, the appropriate, you know, receptacles. It's a little bit sad. It's a bit sort of disconcerting. I mean, what kind of crowd was it? I mean, you know, are they really into betting against global warming? Really? Because if they are, they shouldn't be, you know, leaving their trash there. Of course, I was not there, you know, because, you know. Anyway, so, all right, that's it. Last point: the dollar is going up and up, which is great news, because I want to buy a house in Saint-Tropez, and maybe with $1 one day I'll be able to do so. Good luck, guys. See you soon, and happy investing.